We've got the analysis report on RZLV AI, or RZLV. Massive 28% surge on that preliminary guidance of a $200 million ARR run rate. Today, we're going to focus on really strengthening its analytical depth and overall robustness.
Right. The core data is explosive. It's about how we frame it.
Exactly. This is clearly a high-impact piece meant to grab attention. We've picked out three, I think, major opportunities here to really maximize its credibility without losing any of that energy.
Let's get right into it then.
So the first point is all about presentation.
Often the easiest place to make the biggest difference.
I think elevating the language from what feels like urgent hype to a more compelling analysis it will significantly broaden the appeal of this material.
Beyond the usual retail investors and, penny stock hunters.
Precisely. The report sets this intensely urgent, almost emotional tone right from the start. You've got terms like chose violence, shocker.
And the rocket emoji. You can't miss that.
You can't. And even inside the report, phrases like, Wall Street was sleeping on this. It all creates this high-octane framing which, look, it's effective for immediate engagement, no doubt.
But
it risks undermining the credibility of the hard financial data that follows. I mean, the $17 million in December revenue, that $200 million ARR, that's serious stuff.
that tension is exactly it. The core figures here are genuinely powerful, especially for a company with a market cap under $1 billion. The story sells itself.
It does.
And when the numbers are that dramatic, the language doesn't need to amplify the shock value. In fact, when you do that, it creates this weird mismatch. It's almost as if the report doesn't trust the power of its own data, so it feels like it has to shout.
That is the crux of it. The goal shouldn't be to kill the excitement. That 200 million ARR figure is exciting. The goal is just to shift the tone, slightly.
Emphasize the strategic significance, the execution, rather than just the raw price movement.
Yes, that lets the core figures speak for themselves with more weight. It'll appeal to the high-energy trading crowd and anyone doing, deeper institutional due diligence. It doubles its utility.
And we can do that pretty surgically. It's just about the lexicon, swapping out the theatrical language for phrasing that still conveys momentum, but with strategic business terms.
Okay, so let's take that opening line. The AI stock that just woke up and chose violence. It's visceral, it works for a click, but for lasting impact.
You'd want something that highlights the fundamental shift.
Like what?
Well, maybe something like, the sharp revision of guidance signals a powerful inflection point in RZLV's scaling strategy. The phrase inflection point is specific. It's exciting, but it's grounded in business reality, not just a one-day trade.
I like that. Or what about the line, Wall Street was sleeping on this? It's a great hook, but we could replace it with something focused on the actual numbers.
You could say, the disparity between prior consensus estimates and this new preliminary guidance underscores a significant re-rating potential. That phrase, re-rating potential, is precise. It tells a sophisticated reader there's a measurable, justifiable reason for that 28% jump.
Beyond just speculative frenzy.
Exactly. And that small shift in language immediately moves this from a report for quick speculation into one that could inform a serious portfolio decision.
Okay, moving on. The second major area is about completeness, intellectual honesty.
Right. With these high-growth, high-volatility stories, analytical balance isn't just nice to have, it's non-negotiable for credibility.
And that brings us to the next point. To make these massive growth figures truly robust, the analysis has to proactively address the inherent structural skepticism that comes with high-growth companies under $1 billion market cap.
You have to.
As it's written, it's an almost entirely unilateral bull case. That's common, I get it, but for real credibility, you need the other side. The report doesn't really mention competitive pressures, execution risk.
The only nod to risk is a quick mention that the volatility is high.
Which is a given. It's not enough for a serious analysis.
Look, anyone reading this knows that a company going from, say, 50 million to 200 million ARR so quickly is, well, fundamentally unstable. It faces immense execution risk. So if the report just paints this picture of perfect, uninhibited scaling,
the expert reader is going to pause. They're going to think the analysis is being selective.
It's about building trust. By ignoring those counter-arguments, the material just seems less comprehensive, even if those risks were considered internally.
So what's the fix?
We'd recommend introducing a dedicated, concise segment. It doesn't need to be long or full of doom and gloom. Maybe call it mitigating factors or the cautious view, something that shows you've tackled the counter-arguments head-on.
It lets you frame the narrative instead of waiting for the reader to poke holes.
Exactly. I mean, the report leans heavily on the accelerated adoption of the Brainpower AI platform.
But accelerated adoption brings accelerated complexity.
So the analysis has to at least ask about scalability strain. Is the tech infrastructure really built to handle that kind of demand? And what about customer concentration risk?
That's a huge one. Are 2 or 3 huge clients driving that whole $17 million December revenue figure? Because that's a massive single point of failure.
And we haven't even touched on capital structure. The whole bull case hinges on comparing RZLV to peers like Palantir or C3.ai.
That valuation gap is the core argument.
So you absolutely have to consider non-multiple factors, primarily dilution. Just saying the multiple is lower isn't enough when a company is scaling this fast. Growth requires capital.
The analysis needs to ask, what's the implied dilution risk to achieve this growth, and how does that affect the valuation compared to peers who might be better capitalized?
It's a real trade-off. If RZLV needs to raise a ton of cash to get from 200M to 400M ARR, that changes the whole equation.
So just a brief sentence acknowledging that risk and maybe arguing why it's manageable, saying the margins suggest they can hit break even faster, that adds huge credibility.
It shows the deep work has been done. That little section on the bear case doesn't weaken the thesis, it inoculates it.
Okay, final critique. This one is about the flow, the structure of the argument itself.
Right, how the technical data fits in with the fundamentals.
This is where we make sure the technicals are confirming the story, not just driving speculation.
And to do that, the structure would be strengthened by integrating the technical analysis, not as a separate speculative segment, but as compelling market confirmation of the fundamental news.
Right now, it feels fragmented. First, we get the big news, the 200 million ARR. Then, totally separately, we get the chart analysis, the breakout, the massive air pocket up to $5.
And then finally, the fundamentals come back with the multiples comparison.
And that fragmented flow makes the technical predictions, like that jump from around $3 to $5, feel disconnected, overly speculative. The chart feels like it's the predictor, not the reactor.
Exactly. When you're making a case this explosive, the structure has to follow a really clear cause and effect narrative. The fundamental news is the cause.
And the technical breakout is the effect.
Yes. So the ideal flow should be financial news as the cause, then the multiples comparison as the justification for why that news matters, and then the technical breakout as the market's confirmation of that justification.
That's a subtle but really profound shift. The current structure implies the chart dictates the valuation. Your proposed structure establishes that the valuation driven by the 200M ARR dictates the chart action.
It positions that huge volume spike not as some hopeful sign, but as empirical evidence that institutions are responding directly to that guidance beat.
So, how do we actually implement that?
It's about creating a narrative bridge. The report has the powerful data point, 200M ARR. It follows that with the valuation comparison to Palantir and C3.
Highlighting that massive gap in multiples?
And that's the perfect bridge to the technicals. You lay out the disparity, the opportunity, and then you pivot. You say something like, this discrepancy in valuation multiples appears to have been instantly recognized by the market, evidenced by the sudden, dramatic technical breakout.
I see. So now the technical discussion, the volume, the moving averages, that air pocket to $5, it's no longer a standalone speculative piece.
It's evidence. You're using the volume and the price movement not as a prediction of where the stock might go, but as proof that smart money is validating the fundamental thesis you just laid out.
It changes the conversation from, look what the chart is doing, to the market saw the news, recognized the valuation gap, and this is the result.
So you reposition that discussion of the huge volume spike. Instead of just an observation, you use it to support the narrative that sophisticated investors are loading up. It becomes a data point about market conviction.
The structure should move seamlessly from, here's why the stock should move, based on the financials, to, here's proof the stock did move, based on the technicals. That makes sure the fundamentals are driving the whole thing.
And that refined flow solidifies the entire argument, gives the whole analysis the heft it needs.
Okay, so to summarize the high-level opportunities here for the RZLV AI analysis report,